Hello, my name is Andrew Betwain. I am the Managing Editor of InsuranceInvestor.com, and today I am joined by Ashish Dafria, who is the Chief Investment Officer for Aviva. Ashish, welcome.
Thank you, Andrew. Good to be here. Looking forward to conversation.
Lovely to have you. Very glad to be joining you with you this morning. Ashish will be speaking at our Insurance Investor Live Conference for Europe 2023 on the 20th September later on this year. Ashish will be speaking on a panel discussion around the challenges and opportunities for insurers in 2024 and beyond, rising to the inflation and interest rate challenges and adapting asset allocations strategies for an uncertain outcome. So a big, broad topic with lots to discuss. Ashish, I'm going to go straight into the questions with you. So my first question is, what strategies should investment teams be looking at to mitigate risks, such as the effects of inflation and interest rates within their portfolio?
A couple things that come to mind, I guess, based on our experience of what we are looking at. I think one, defense over offense. So making sure that many of us have probably a little bit of rusty skills around what does it mean to navigate a downturn, especially a credit down cycle. We haven't really had credit cycles in a long while. Just making sure that those muscles are well tuned. Making sure that the secondary implications are well thought of. I mean, some of the kind of primary ones, kind of what does the credit cycle do? How do I manage interest rate? Kind of obvious and most people will be focused on. But what last September told us is making sure that secondary implications such as liquidity are really, really important to be focused on. So just a couple of things to think about.
Good points there. So my second question is, what adjustments would you recommend to ensure that insurers can adapt and capitalize on the opportunities that arise in the market, particularly around asset allocation?
Yeah, I mean, I think the processes that have held us in good stead, the discipline around asset allocation, the making sure we are approaching it diligently, they still apply. It's not like things are kind of all the old learnings have gone out the window. But recognizing, at least in my view, that we are in a different regime now than the one we have been in the past is really important. So making sure what the objectives of asset allocation are still the right ones and well placed, and there are multiple conflicting ones to choose from. I guess we talked about the risk management. We talked about making sure you're analyzing risk and not just the primary, not just the credit, not just the rate, but also kind of liquidity and follow on ones. But also making sure that the asset allocation is appropriately sensitive to capitalizing on opportunities. And a period of turmoil, a period of messy situation, if you will, invariably gives rise to opportunity. There are some today, there will be more tomorrow. Making sure that you can capitalize, we can capitalize on it in a disciplined manner is really important.
So that messy situation and those capitalizing opportunities, building on that, my next question. So focusing on those possible opportunities around those, what specific investment opportunities do you foresee for insurers in 2024?
Three perhaps that rise to my mind. I think one, and I mean, these are not necessarily new, multi-year ones, but I think they continue to be. I think one is the whole theme around infrastructure investing has been with us for a while, but I think it still remains very appealing, still remains very important, even though we are in a higher yield environment. I think to us, infrastructure was not a yield chasing play. I think it was all about diversifying exposure, taking exposure to real assets in asset classes that are actually very friendly in a higher inflationary regime. So I think that and has the added benefit of, I guess, sitting here in the UK, building Britain better, kind of investing in the economy. So that still remains quite important. We like emerging markets here. We are investing in emerging markets, perhaps disproportionately so. I think we are increasing our allocation to it. So I think, again, that remains a really interesting opportunity. You do have to pick your spots in that. But as a whole, in the regime where the developed market is facing with policy turmoil that the emerging market has a little bit gotten used to in the years past, again, is interesting. And I guess third, again, to mention sustainability, we think is a mega theme that provide not just meaningful risk, but also meaningful opportunities for years to come. So various sustainability linked investments we still find quite attractive and we think will remain quite relevant in 2024.
That's very interesting. And to finish us off, Ashish, I was going to ask you if you could gaze into your crystal ball for us and in your personal view, where do you see interest rates and inflation going into 2024 from a personal point of view?
Last time I was trying to look into my crystal ball, Andrew, it turned out it was the magic 8 ball that my son used to play. So I don't pretend to be able to get into a crystal ball. But I guess in terms of how we are thinking about it, look, I personally have for a long time been kind of not a subscriber to the team transitory. We viewed inflation as a problem, as a sticky problem, and I think that's kind of what's playing out. So I think we do continue to view that there is a regime shift. The risk that we highlight internally is a risk of policy divergence, stroke policy errors. In being a central banker is a really difficult task now. How do you balance the slowing economy with a persistent inflation? Couple that with 2024 as an election year here in the UK, in the US, and hence you can see fiscal policy diverging from where the monetary policy is going. So I think that's quite critical. I guess probably a final thing to say, I think it was slightly easier for me to take somewhat of a contrarian view that, oh, I'm not in the team transitory camp because it was contrarian. I think now it's very much a consensus view that does make us question that everyone has now accepted inflation is sticky. Does that really mean that we can see the other side of it? So I think that's kind of being contrarian. That's what we are thinking about.
Well, it'll be interesting to see what we have in September when we come to the conference. So I'd like to thank Ashish for his time today. And if he's whet your appetite about interest rates, inflation, and all those sticky areas, please do visit clearpathanalysis.com, where you can find directions to how to register and attend for Insurance Investor Live Europe 2023 Summit. And I'd like to thank Ashish for his time. And I look forward to seeing you in person at the event and hearing your thoughts, Ashish.
Thanks, Andrew. Likewise. A lot of time between now and September. Look forward to it.
Thank you very much.